Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and the big players in the market are doing, so the non-commercials, and how they're moving and changing their orders. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. Now, without further ado, let's jump straight onto the charts.
Now, starting here from the monthly time frame, what we can see is that at the moment we have a market which is rejecting to the upside a quite strong historical structure level. In fact, this area was acting as previous resistance from which all these previous rejections to the downside were created. Then the market with this impulse broke above the resistance, and all that previous resistance was turned support here, and the market retested the previous resistance turned support exactly here, and since then it has been rejecting that level to the upside. So from a monthly standpoint, everything has been happening as you would naturally expect in a situation like this, because again, when you have a very strong resistance level, which already has been respected in multiple occasions in the past, and the market then manages to break above that zone, that is what is commonly referred to as a previous resistance turned support, and the market usually goes for a retest of the level and then respects it as support and rejects it to the upside. So here in the monthly, everything has been happening exactly as you would usually expect. We can also see how from a trend perspective, we're now clearly in an uptrend with the market creating new higher highs and higher lows. Now, in an uptrend, that is exactly what you would expect. You would expect the market to create higher highs and at the same time create higher lows. That is the definition of an uptrend itself, because corrections give the possibility for new buyers to step into the market and push the price higher, specifically institutional buyers. And we will be speaking about the institutional positioning in just a few minutes when we move to the commitment of traders analysis. For now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, we can notice how the market has also here been creating a series of higher lows, which we can clearly identify, and we just had the third touch of this trend line and the market is currently breaking out to the upside. We can also notice that at the same time the market was creating lower highs here. So what we have here is a triangle formation which is currently starting to break out to the upside, which could mean that there is the start of the next push to the upside. Dropping down on the daily time frame, what do we see? Now here in the daily, I did speak about gold a few times in the past. I spoke about it when the market was here. After the creation of this M pattern, I explained all the reasons for which we could expect a rejection to the upside. And in fact, that is exactly what the market gave us. Then after this impulse and correction, I made another breakdown explaining all the reasons for which we could expect the creation of a new higher high. And again, that is exactly what the market did. And then after this correction from here, I made another breakdown explaining all the reasons for which we could expect this rejection to the upside, which again is exactly what the market just did. And by the way, I will link in description all those previous analysis so you can go and check them out for more free education. But at the moment, what do we have? Well, at the moment, we have a market which is testing previous daily resistance here, which is now turned support. We really haven't deeply tested the liquidity inside of that zone yet, but the market seems to be approaching this level. Now, before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders. So what the big players in the market are doing. Well, if we look at the data for gold, it is quite clear how institutions are now moving again back to the bullish side for gold. We went from 234 K net positions all the way up to 279K net positions. So institutions are now aggressively moving back to the bullish side for gold, and we can see 20,000 longs added from an institutional perspective on gold just with the last report, and 3,600 shorts getting closed. So institutions are moving aggressively to the bullish side for gold, currently sitting at 312K longs compared to only 33K shorts. So massive amount of longs compared to shorts on gold from an institutional perspective, and more longs being added and shorts closed with the last reports. Let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description, so you never miss new updates. Now back to the analysis. So in a situation like this, with the market testing this support, we have to keep in mind that it is a confluence of support zone, because since we have an impulse and now this correction, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse leg. And this shows us how we have the 0.3 to 50% and 0.618 Fibonacci retracements all lining up in this area. And when you have multiple layers of support in the same area of price, usually that, since it is a confluence of support area, brings more institutional longing. And since institutions are already longing, this could mean even more moving to the bullish side. So if institutions will be if the market will be testing this area and institutions will continue to increase their net positions, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside for the market to complete this daily impulse correction and impulse pattern to the upside. That definitely wouldn't surprise me. Now, all these general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg, because if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website, which you find also linked in description. Here, you will have the possibility to gain access to all my courses. So really complete courses that will guide you from the very basics of charting all the way up to more advanced concepts like building algorithmic trading strategies using quantitative finance tools like the quant analyzer to build portfolios of strategies, and a lot of really important and really interesting things that you need to know if you want to become a better trader. So this is something you really cannot afford to miss. You also have the possibility to gain access to the trading station software with the Telegram notifications integration, one-on-one mentoring directly with me, the COT data software that you often see me use on the YouTube channel, and you also have the possibility to integrate with gaining access to all my EAs, so my personal EAs, the ones that I have developed and that I trade on my own account, and also to have access to the trading show, which is essentially a live stream of all trades coming from my account directly on the Telegram channel as they are executed and managed. Here on the website, you will see that there is the complete presentation of all the EAs that I personally run. And if you continue to scroll down, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. And there is also per time slot this special discount. So at the moment, there are 10 days before the next price increase. So I would really suggest that you go and check it out as soon as possible. The link is in description, and I will see you in it. If you enjoyed the video, make sure to drop a like and also let me know in the comments below any new pairs or topics that you would like me to cover in the next videos. And I will see you in my next breakdown.